So much to talk about today. Everybody was saying that inflation was going to go so much higher, and I told you that it wasn't. I'm going to show you in chart format exactly what's going on, and I'll talk about how inflation has already begun to come down in a lot of areas. Then we've got a whole bunch of other stuff to talk about. We'll get to it really quickly. Nothing we say here should be considered as personalized trading advice for you. Do your own due diligence, make your own trading decisions, and live with the results of those. As I told you guys in my book, Up Thinking, don't get into the weeds. In this video, we're going to get into the weeds a bit. We're going to look at specific stats and specific charts. But I generally like to look at the big picture because you get a better feel of what's going to happen. But I'll show you exact numbers and exact charts to show you how inflation is already starting to come down. You guys might remember that lumber prices were really elevated, and that added at least $15,000 to the price of building a new house. I asked my friend who builds homes, what happens with that? And he says that they just take the hit with that. But now lumber prices have started to decline rapidly. For 1,000 board feet, in March, it cost you $1,302. And now that same amount of lumber in May, just 2 months later, is only $683. It's dropped by about half. Other commodities in the last week have dropped pretty significantly. In the last week, wheat is down 5.8%, cotton is down 1.8%, cattle is down 1.7%, and corn has declined 2.4%. But let me show you in chart format exactly what's going on with inflation, because everybody else and their grandma is telling you that it's going to go so much higher, so much higher. It's not going to go higher. I believe it's going to go lower as we go through. It's going to be a very difficult time in the economy, especially as businesses are already starting to show that they're slowing down. People are not spending money on just about anything because of the inflationary shocks with fuel prices and with food prices. And we'll get into a couple of specific articles about this as well in this video. What you're looking at here is information from the U.S. Bureau of Labor Statistics displayed through tradingeconomics.com. And this is a chart of the inflation rate. And you can see here as the inflation rate slows, that's disinflation. That's what I was talking about. But in the last 2 months, it peaked at 8.5%. And then you can see here, and it dropped month over month down to 8.3%. And with a lot of the trends of the declining prices of commodities, you're going to see inflation rates continue to decline over time. And this is the part that you're feeling with inflation. The consumer price index, the CPI, has done nothing except for climb for a couple of years now. But hopefully it's going to level it at this level and start ticking lower. But this is the one that matters that I showed you, is the core inflation rate. You can see how it's starting to decline. Disinflation was right there because the speed of the increase slowed down. 5.5 to 6, that's a 0.5 increase. 6 to 6.4, that's a 0.4 increase. 6.4 to 6.5, that's a 0.1 increase. That's disinflation. The inflation rate's slowing down. And then from 6.5 to 6.2, it's declined that much. So I'll take a victory lap on the disinflation and the declining inflation in the face of everybody saying it was going so much higher. Maybe I look at things different than other people. Maybe I see things different, and it works out pretty well. And you can get the benefit of all of this and get a leg up if you have a small amount of money to invest by learning what we're doing at the peterleeds.com newsletter, which is world famous and has subscribers on 6 different continents. There's a reason for that. This is the one that I'm hoping will slow down a bit. The inflation in rental prices. This is the balance sheets for the banks in the United States. You can see that it was dramatically higher, and then it came down for 4 weeks after that. And with the commitment of the Federal Reserve, perhaps those numbers will go even lower. But here is the problem. United States private debt to GDP. That's an absolute explosion from 218 to 235.5 last year. People are living off of debt. They're living off credit cards. Corporations are living off of lines of credit and business loans. All of this is engendered because of the low interest rates. When you keep interest rates so low for so long, there's a lot of people, organizations, corporations that are going to just take on more and more debt. It's so much easier than figuring out how to make money. And you can see the trend in the loans to the private sector is done very little except for increase over the last year. And right here is the low interest rates that has fueled a big part of all of this debt expansion. But it wasn't just recently. It was also 2012 to 2016, the interest rates were so low. You need interest rates to be above zero to have a healthy economy. This one is very troubling. Single-family home prices. This is month to month, so you can see that home prices increased dramatically in April, from January to February, then from February to March, from March to April. Home prices are skyrocketing. That is an unsustainable trend. I love to find unsustainable trends because you know that it's going to reverse. The house prices are already out of reach. The further they go, the more out of reach they are, the more the pull back towards realistic valuations. Here's mortgage rates. And you can see here the total housing inventory has been increasing for 4 straight months now. That's what I told you was going to happen. The inventory will increase. That's going to take care of the tight supply. It's just going to be very slow. It's going to happen over quarters, not weeks. Hey guys, check out this email we got from Shauna Pinky Harris. Hey Shauna, she was born legally blind. And she says in the email, I had a chance to listen to an interview Peter did on Stocks to Trade about a year ago and was so impressed with Peter's commitment to building a community of sharing, honesty, and integrity that I finally have decided to take the leap into penny stock investing. If you want to talk about building a community, everybody here, if you're in the area, New Orleans area, go to Pinky's at the Court, get yourself a coffee, show support for a fellow PeterLeeds.com subscriber. Let's make this into a family. Now, put low interest rates together with corporate tax rates. This is what the chart looks like. The federal corporate tax rate was consistent and then declined so significantly and is very low. Where's the money coming from? There already isn't enough money. And you've got Biden now talking about, or actually actively forgiving student loan debt. This article is from PwC. Hiring freezes and layoffs are happening everywhere. Here's what you should do next if your company hits pause on hires. You think the unemployment rate's really low right now? It's only so low that it can go. The next move is going to be a lot higher. And you're starting to see companies be more cautious with their balance sheets. They're doing less hiring. They're not replacing workers that leave. They're doing some layoffs. This is going to start rolling, and that's going to increase the unemployment rate. And this one was from CNBC. Startup investors are warning of dark days ahead as boom times are unambiguously over. Prominent venture capital firms are telling their portfolio companies to start cutting costs and looking for ways to cushion their cash position. That's exactly what I was talking about with the unemployment. They're starting to not hire people or lay people off. That's one of the ways that they're conserving money in a time where the entire economy is slowing down. Families will skip meals to deal with the cost of living crisis, UN Special Advocate says. You don't need a special advocate to know this. You would have already known this. Of course you skip meals. They always do this. I can't believe people get paid for this stuff. Do you guys understand why the economy is so upside down? Because people are getting paid to spin their wheels, get into the weeds, and talk about all the stuff that I could have told you just by a conversation. An increase of food prices of the magnitude that we're seeing, of energy prices, basically will mean that a lot of families are going to have to go from 3 or 2 meals a day to only having 1 meal a day. Queen Maxima of the Netherlands told CNBC. According to the World Bank's latest Commodity Markets Outlook report, energy prices in 2022 are expected to rise by over 50%, while wheat prices are forecast to soar by more than 40%. I'm not on the same boat. I don't necessarily agree. And I'm not saying that energy prices couldn't double or triple from here, but Saudi Arabia has already come out and said that they're going to make up for the shortfall in oil because we're not getting oil from Russia anymore, or Europe's not getting oil from Russia. And so Saudi Arabia is stepping up. Anytime when these sort of things can be controlled by decisions of groups of people or by countries, that's an influence that can come to bear to hold the prices lower. So if oil prices went up dramatically, there'd be more activity, decisions to bring oil prices lower. And you heard about El Salvador going totally for Bitcoin. They're using Bitcoin as their official currency. That's going really badly. Besides the price of it coming down so much, besides it being so volatile, only about 20% of people are actually using the digital wallet they gave them. Many of them just wanted to get the bonus $30 or whatever you get when you sign up for it. But there's so much confusion. People are having trouble with it. Most companies, most businesses, which are all mandated to take Bitcoin as their official currency, most of them do not take it. A lot of them use cash still. Most people in El Salvador use cash. They prefer cash. Most of them don't even have a bank account. And many of them do not have a smartphone to be able to be involved in this whole Bitcoin thrust that El Salvador has wrongly proceeded with. And I'm just calling out this article because I want to show you one very specific part of it. Brad Garlinghouse, CEO of cross-border payments company Ripple, said the company has a very strong balance sheet, predicting a rise in mergers and acquisitions in the crypto industry. That's a good thing. And I'm going to tell you guys that it's going to capitulate, and you want to jump in with both hands at that point into Bitcoin or Ethereum only. The industry is starting to consolidate, going from however many thousands of cryptocurrencies there are from week to week and day to day. This will be a necessary step to make cryptocurrencies stronger. I've said this from day one. It's all about the fragmentation. If you run a restaurant that's tough enough, what if you had 45 competitors on your street? You'd probably do better because the best place to locate is directly beside your competitor. But now if there's too many options, there's only so many dollars, so many people going to buy something to eat. You don't want it to be fragmented and split up among too many different restaurants. For example, same thing with cryptocurrencies. The industry will get stronger as many of these altcoins start to either fade away, or if there's more mergers and acquisitions. That's the mark of a strengthening industry. But the time to get involved with this, in my opinion, is not anytime soon. Not right now. Wait until people are done selling. Then you get involved when the industry consolidates. And this one is from CNBC Pro. Russia hits back at the EU's partial oil embargo, says it will find other importers for its crude. Crude oil is a commodity. That means that there's dozens and dozens of countries who want it. Of course, they're going to find other sources to export it to. If you have something of value, you'll always be able to find somebody who wants that value. They want to use that oil. If Russia doesn't send their oil to Europe, they'll be sending it or selling it to other nations such as China or any of China's allies. The Luna cryptocurrency has been resurrected after its $40 billion collapse. It's already crashing. Terra has launched a new version of its failed Luna cryptocurrency, which plunged to $0 this month. At its height, the old Luna, known as the Luna Classic, had a circulating supply of over $40 billion. For $40 billion, just wiped out instantly like that. This is what I'm saying. You got to be so careful with any of these altcoins. There's a lot more risk here. You have a lot more chance of losing your money. And if you think buying a lower priced altcoin is the way to go because you're not risking as much, I'll tell you again, I used to have this conversation with people when I was talking about penny stocks. They say, how much can I lose? It's only at 25 cents. You can lose 100% of whatever money you invest into anything, including low-priced altcoins. There's a lot more pain here ahead of us than rewards. So be super cautious right now. And there will be a time to get back in all of this stuff that'll be very lucrative for you, but it is certainly not now. The revived Luna token is already trading on exchanges, but its price is crashing. And when I'm talking about inflation coming down, I mean in America, United States. It's not the same case in Europe. The Eurozone is facing a lot of recessions. They've got incredible inflation right now. Eurozone inflation hits another record high as food and energy prices soar. Eurozone inflation came in at 8.1% for the month, according to preliminary figures, up from April's record high of 7.4% and above expectations of 7.8%. Rising prices have been exacerbated over the recent months by the war in Ukraine, particularly food and energy costs. Inflation, which remains persistently high, not just in Europe, but also in the UK, US, and beyond, is causing headaches for central banks, which are also balancing the risk of recession. Recession is a foregone conclusion. I don't think that we're in one yet. It wouldn't surprise me if we were, though, because businesses are completely clamming up. There's less money being spent. There's less velocity. There's less money in savings. More people have greater debt loads. There are ways to get out of all of this, but it won't happen, so what's the point of talking about it? China faces a nearly $1 trillion funding gap. It will need more debt to fill it. This is also from CNBC Pro. There's a lot of concerns with China in a lot of different aspects of the economy. But what they're doing, in my mind, they're basically juggling chainsaws. It's going to hit them one of these times, but it hasn't yet. And they're doing quite a good job of doing it. They're able to keep these chainsaws in the air. But one of them's going to land on their foot, or they're going to drop one pretty soon. There's a lot of problems with the real estate market in China. The actual government itself is running out of money to the tune of about $1 trillion. Nomura estimates a funding gap of about 6 trillion yuan, $895 billion, roughly 2.5 trillion yuan in decreased revenue due to tax refunds and weaker economic production, and another 3.5 trillion yuan of lost land sales revenue. The reason you should be keeping an eye on this is because if China goes down, there's going to be so many shockwaves sent all over the world. It's going to affect you if China goes the way that it seems to be getting closer to going. They've been able to juggle chainsaws for a while, but I think that who knows how long they can do it for, but eventually it's going to come down, and that's going to be very problematic for global economies. China was the growth capital of the whole world. A lot of companies, a lot of nations were increasing their revenues, increasing their economic activity because of all the growth in China. That's slowing down now, and there's all sorts of problems in the way they did things, such as with, you heard about Evergrande. That was a debacle, their whole housing market. It was in an unsustainable situation. So we'll keep an eye on this, and this is why you want to subscribe to these videos. We'll keep an eye on this, and I'll tell you when China is fully breaking down and it's time to start taking some action. I watch all this stuff not just to see it happening and tell you about it ahead of time. It's so that you know what to do when these events happen. When this event happens, I'll tell you exactly how you should play it and how you can land on your feet, depending how it plays out. This next Peter Leeds Gold Coin Contest is now officially closed for entries. It was so cool to see all you guys, the photos you sent in, a lot of them showing what your lifestyle is like and sort of showing your world, things that are important to you. You guys are now all going to vote on which photo you like best. But first in this video, I'm going to show you a few more. I've got a huge backlog of photos I got to show you so that everybody gets the exact same on-screen time. And then I'm going to curate them all into one place. And you guys will go there and you'll choose 2 photos, the one you like best and the next one you like best. You can vote for your own photo if you want. I would strongly recommend you do that. For all the people who sent in a photo, we're giving away a bunch of prizes. For whoever you guys choose as the winner, there's the gold coin. That's the grand prize. But we're also giving away the Peter Leeds Academy, the Peter Leeds Trading Chart course, the PeterLeeds.com newsletter, which specializes in shares trading at $5 each or less, the Peter Leeds app, a digital copy of my book, Upthinking, and of course you get the wonderful bragging rights of having won the second official PeterLeeds.com gold coin contest. Thank you all for your entries. I will talk about this more next week, and I'll explain to you how to take the next step so that you guys all vote on which photos you think is deserving of winning. On behalf of the entire Peter Leeds team, we love you guys. We do this because of you. We do it for you guys. Thanks so much. I almost walked away, and you guys were the ones who encouraged me to keep going. So I hope we're helping you out. And if you guys have any questions, just reach out to any of the small stock specialist team members. We're going to help you out, get you on the right track.